Hi there folks, it's Matt Hayson here looking at everything going down in and around the Sydney property market over the course of the last week. Now of course it was Easter and a shortened up period, but that doesn't mean we didn't see incredibly good foot traffic coming through our open homes over the holiday weekend, which just gives you this underlying level of confidence in the Sydney property market that no matter what's unfolding, there's always this heightened level of demand and intrigue about buying and selling. But this week I wanted to touch on a really particular interesting thing, which is this generational shift that we're seeing sweeping through the Australian property market right now, with baby boomers who are selling their larger scale assets and looking for more modest accommodation. Now, the beneficiary of this big generational shift is quality apartments and townhouses in particular suburbs. And we saw this play out last Thursday at two particular auctions just before Good Friday for this townhouse at 19 Wall Street in Balmain. 3 bedrooms, 2.5 bathrooms, double parking. It had been in the one family since buying off the plan in the late 1970s, but it had almost house-like proportions and wonderful city and bridge views. Now this attracted a huge broad mix of buyers from younger demographics and older families, as well as the baby boomer generation. And it was that mature buy pool that really pushed the bidding, with the reserve set at 2.95 and the property selling competitively under the hammer for 3.63. We then shifted straight across to another townhouse at 10 Lawson Street in Balmain. Again, 3 bedrooms, 2.5 bathrooms, double parking, and it was this mature buy set as well, pushing the value there with a reserve at 2.5, and it sold for 2.875 under the hammer. Now we'll continue to see that generational shift sweep through the market over the next 5 to 10 years. Also this week, according to CoreLogic data, Sydney property values are continuing to increase, up modest gains though, 0.3% to close off the month of March. And to close off the March quarter, Sydney property values were up by 1%. Pretty hard to see 1% gains play out in real time, property to property, but as I've mentioned over the last month or so, it's really been a sign to that A-grade blue ribbon real estate. In Perth, not sure what's happening there, their market is booming. It was up 5.5% to close off the March quarter as well. Now with property prices on the rise, this is going to cause a bit of a headache for the RBA, who are continuing to ponder about what they do with the cash rate. Will they cut this year? Will it be next year? And experts do remain divided there as well, because in play at the moment we've got a few things. We've got record migration, the share market's hit a record level as well, we've got a robust and resilient labour market, and of course now rising property prices right across the country, which are not exactly triggers for the RBA to inspire them to cut the cash rate. Now, as I mentioned, experts do remain divided, and at either ends of the spectrum here, we've got our two Stevens. Stephen Koukoulas, who is suggesting that the cash rate will be aggressively cut and will be sitting at 3.6% in December. We'd all like to see that unfold, I'm sure. But at the other end of the spectrum, we've got Stephen Anthony, who's suggesting the cash rate will actually be increased and be sitting at 4.6% by the end of this year. So, as always, we'll be keeping these economists accountable and seeing who is closest to the pin. Now that leads us into this weekend, folks. We've got some amazing properties open for inspection, some great properties going under the hammer as well, and our entire team looks forward to seeing you out and about. Thanks for watching, and I'll catch you all next week.